Hello, everyone, and welcome to Options Paycheck live stream. I will analyze today what has been happening on the market and what change I can see in my portfolio with my options. So let's have a look directly. I think the most interesting is actually Nvidia because most of the options is actually quite safe, and it seems that I will be collecting premium. With Nvidia, it's a little bit different, so it looks a little bit dramatic, and I might be selling um, my shares at the strike price of 110, even though my purchase price was a little bit higher. But let's review quickly what is the situation. So for Tesla, we saw increase during today 22%. That's really high. It's crazy how this market reacts. And I have two open call options. One is for strike $285, and so I would be selling 100 shares for 285. As of now, I um, I could still close the trade. I could still close the options, and I would collect only $191 as a premium. So if you remember from before, uh, the the premium was somewhere around, yeah, $500, right? So actually, if I close the position, I would be earning only almost $200, so $300 less. And I will keep the option open for a few reasons. I don't expect the market move with such a strong volatility and such a strength tomorrow. It might be, but still there will be the impact of China and visibility, or the chances that there will be some trade war with China, which will be impacting Tesla. And so, yeah, I think this is still something open. So I keep open both. I would be selling actually for my purchase price, and so I would collect premium. So it's okay. I don't see any risk actually here. And let's have it played out. But then let's have a look on Nvidia, because this is more interesting from my perspective. There is really question whether I should close the option, or I should roll the option, and what to do really, because the purchase price of my 100 shares was actually $115. And so right now, if I sell for $110, I will obviously have I'll be losing money. I will have loss. And um, and so the question is what to do. I think one, maybe the best option is to wait and potentially roll the options. And actually, I'm not sure, but I think the rolling of options is not possible from the web interface, but I would need to go to my phone and actually roll the options in my app on the phone. And I would be rolling options actually to April 17 or April 25, with strike price again potentially 110. But basically the difference is if I need to roll the options, it means that first I need to buy the options back. So I would be buying for 575. Maybe let's write it here, right, somewhere. So 575, 575 would be my buying price. Uh, and then if I was selling again, then 670 would be my selling price, right? So the difference is my premium, the buying minus selling, and so I would be earning 95 cents uh, per one share. So multiplied by 100, I would be basically earning $95, which is nice. And also there is a chance actually that Nvidia will be somewhere around this price. What I could do then is also do the same, basically 2 weeks in the future, and the difference would be the price would be 730, right? Uh, so then I would be earning additional premium of $155. And the question is what the price will be doing. So let's have a look on the chart and let's analyze what the chart is saying. Zoom in, and so this is 110, correct? Then I've been buying around 115, somewhere here. So we are almost there. And then the question is what the stock will be doing, right? I think there was somewhere actually, or maybe it wasn't trading view. I think there was some analysis of potential future moves. But anyway, I mean the stock is going down on the fears and uncertainty of the trade wars, right? Um, Plus the uncertainty around Nvidia itself, and how much they can keep this. Price levels in the future as well, and how much they can keep sales. I believe in Nvidia quite a lot, but still there's a chance actually that the price will be still volatile and moving down a little. Also, very often when you have strong moves up, then it corrects itself, and drops a little. So I'd see uh, like strong move here, then a little bit of correction. Strong move, correction. It's always like this, right? It runs in cycles. Strong move, up, correction. So there's a chance actually that by Friday we will be even below $110. Um, let's see. So I will decide on rolling the option some when on Friday, and yeah, I either keep the options, depends on the price, or I will roll it more in the future and get some additional premium And basically, with additional premium, if I get $155 premium, then my potential loss would be lower if there was any. And I could be rolling the premium basically um, more in the future and hoping that the price will go to 110 levels. I think that's one option how I can play this. All right, so if I go back to the logbook, trades logbook, I see the Nvidia option, right? So this is quite dramatic, and let's see how it plays out. But then there was also CLF, and I would like to talk about it as well. So CLF. And when I was actually highlighting this line, the price was somewhere here, right? So the price was going down from almost $8 or 770, was going down. It was 680, and with the uncertainty of this week, it wasn't really clear whether this price keeps dropping potentially to the level of $6 and even lower, right? So these levels are the levels of my two call options that I sold, and so I was thinking that this sold call option is also one where I might need rolling the option. And here you go, right? One day later, end of the day, and you see actually that the price move was completely different because of the news. And the price is 15% up, and there is no need to worry right now about there is no need to worry right now about this call option. Sorry, about this put option. It might rather be actually that the stock will sell for $9 uh, on this sold call option. But I mean, I would not necessarily mind because look, I bought for what was the price? Seven something, 740, right? So the average price is 740. Um, Now it's 15% up. If it sells for 9 by the end of the week, I mean it would be very nice. It would be over what, 30%. So yeah, that would be a really nice trade for a week. Um, we have here something else that is interesting. So GameStop, I think this looks okay. Probably expire out of money. Nvidia, we've been talking about Rivian, 13 strike price. Also probably, yeah. I mean, let's see the price move, but I assume even this will expire out of money. And like this week you cannot say, right? This week it's so it's so the moves are so aggressive that you cannot say really uh, whether it's safe or not. But this seems to be quite safe. There's quite a margin actually, and quite a buffer where to go. Yeah, and then Tesla. I mean, the change of price of these call options is crazy. It's really crazy. But I'm on the selling side, so I sold for the premium, and um, I'm not really impacted by this, right? I would be impacted. I'm impacted by the strike price. So the important for me is when I sell calls or covered calls. In this case, the important is strike price and whether we are going towards strike price. And then you need to set the strike price in a way that you are not losing money on the trade, or yeah. And if it's like I said for Nvidia, then rolling options or wait it out is this option. Of course, I could close it as well, but I don't want to close it with the loss as long as I don't need to. All right, all right. So that's for now. Maybe we can check. I think what would be interesting as well to check actually the options. Um, because the options actually calls on a spy. So let me try to find it. This option chain. Nah, but I need open interest option charts. Open interest. Because someone on Twitter was saying that there is massive. What is it? This one. There is massive open interest of calls, and that drives actually the price up as well. Maybe we can check for Tesla if there is really some unusual volume of or open interest calls. Um, let's have a look. So, and we compare. Actually, these are monthly, right? And then we compare with additional monthly options uh, and open interest. I don't remember what it was at the beginning of the week. We were checking. I would need to check the video again. So I don't remember really how much it was before. But this seems really like quite high number. And so that's the other thing, and it has implication also for Nvidia, right? If there is a lot of options, call options open, the price will be pushed up. But then once there is no pressure or not enough additional pressure from options, the price will go very quickly down. And so we can see there was a lot for strike price of 260, then for 270, but then it's less and less, right? So there is not so many call options open. Significant volume is then at 300, but it might not be really driving the price so much. Let's have a look actually on the stock. So, and let's have a look really on the day and the details of the day. We can do 1 hour. Let's see whether we can read something from this or not. Um, so there was 260. All right, so 250, then 260 was quite a volume. 50, 260. Um, yeah, I don't know actually if I can see anything from this. Um, 260. Yeah, around 260. It's started to be grow maybe a little bit less. Um, yeah, I don't know. It really might be that this was driven a lot by call options, um, and then actually the pressure loosen up a little. Yeah, might be. So maybe if this was the main driving force, actually for 22% move, then yeah, it might be dropping soonish as well. Hmm. Yeah, interesting. Interesting. What about Nvidia? Um, option charts, open interest, and I want to check again with the monthlies because there are usually many open options, so high open interest, and yeah, it doesn't show it. Well, yeah. So it's similar like with Tesla, right? It is for weeklies. It's quite a lot of options, but um, yeah, yeah. For weeklies, it's quite a lot. So maybe let's have a look in detail. Also, what were the strike prices? Yeah, 110 was quite high, and then 115, but then it goes down. So again, right? If this and 105, where did we start today actually? Yeah, 98. Yeah, well, so I mean there might be options ramp up, right? This driving the price a lot. Then if there if there were any short sellers closing shorts, and then in addition buying pressure from people, seeing the opportunity as the tension about tariffs is a little bit less, then yeah, it could be actually driving force. It could be driving force. Hmm. Right. And in such case, I will just really, as I was saying, I'll be waiting because the price might be dropping actually once this pressure from options goes down. Huh. But speaking about it, actually next week will be monthlies, and how does that look like? Yeah, well, yeah, I think this is all right. So 100,000. Let's go back. Uh, yeah, yeah. Okay, okay, okay. Might drive the price a little bit up. Mm. Yeah, I mean, we will see. Um, we will see. So, hmm. It seems the levels are similar, right? 125,000, 100. Oh no, oh no. Yeah, it's less. It's less. Yeah, and this 130 strike price, it will not be able uh to push the price so much. Hmm. Yeah, let me put a comment. Um, roll if price above 110 the next week. Monthlies might be better. 2 weeks. 2 weeks. Right. And this, I can actually remove the color. There's one more remark for me, and I need to write a note about this because when there is, there are a few moments where the prices are going up like this, right? So, and I was talking about it already in the previous streams. Um, when there is a earning call, the buffer that I usually put on the uh, on the strike price is around 20%, right? And depends on the stock, but rule of the thumb, let's say 20%. But there are situations when 20% might not be enough. One is earning calls, that's obvious one, right? And then the other is monthly calls. Sorry, monthly options cycle. So there, 20% might not be enough, especially if there is a lot of if there is options ramp up. But what is happening and has been happening this week is, I mean, it was just big news situation, right? So and those major news can move the price aggressively a lot, and yeah, it's really something to remark as well. That when there is expectations of big news, 20% buffer might not be enough, or margin might not be enough actually, uh, to be out of money by the end of the week. All right. With that, if you like the content I'm sharing, please click like. Also, please subscribe because I'll be sharing more on my trades. As you can see, so far in 2 weeks, I've earned $974 dollars in premium. I'm showing you my live account. So this is a real account, real money. When I'm losing real money. When I'm earning real money. And so you can see also how I react, like what is the psychology behind the trades. It's very important and it's very different from real money. From uh, if you compare it to paper account. Yeah, so please subscribe, please like if you like the content, and also leave your comments where I should focus next. And with that, have a nice day and see you next time. Bye bye.